Welcome back, everyone. Welcome back. Welcome back. Joseph James here. I'm from School of Trade. I run a live trade room every morning, and I'm here with Marty Errico from Traders Audio. Marty does a live broadcast from the NYMEX exchange starting at 10 minutes before the hour of 9 o'clock each morning. It's a pleasure to have him with us this morning, and we're going to go through our very unique morning prep. We're looking at crude oil futures this morning, and we're going from the screen here in Los Angeles all the way to the floor on the NYMEX exchange, looking for high percentage trades to kickstart our trading day. As I said earlier, my name is Joseph. I'm a technical analyst, which means I use charts. I don't use much news. I don't use much fundamentals. I use technicals. I'm going to provide you with a top-down approach that starts with a slower time frame and then moves to a faster time frame so we can try to anticipate direction at the open and look for high percentage trading opportunities starting at 8 a.m. Eastern Time. Alrighty? Once I'm done with my charts, again, I'm going to provide you with some very good direction here this morning right out the gate. Marty's going to see if it matches up with what he's seeing in the pit, and I think this is one of the most valuable aspects of this morning prep. Everybody's got charts, but not all of us in our home offices, right, because many of us are trading on screens these days. Most of us don't have the luxury of being able to look up at that board or to see what's happening on the floor or to feel the momentum of the personality in the pit, and that's, of course, where Marty Errico comes in. Marty is a broadcast every morning at 8:50 a.m., and I find it to be very valuable to somebody like me who is a screen trader. All right, enough of the chit-chat, JJ. Let's jump right into it. Let's look at some charts this morning. Now, we usually use the slower time frames earlier on in the week. If you guys have been watching, Monday, Wednesday, Fridays, we're going to use some of those slower time frames. This morning, what I'll do is I'll jump right into a 15-minute chart. And this 15-minute chart is really all we need here to be able to see what the reality is this morning. We've got ourselves in a price wedge here on crude. And I'm going to open up some of the pit session levels we'll be talking about with Marty in just a moment. But this chart says it all. As you can see, we're making lower lows and lower highs. We've got a higher low and a higher lows. We've got lower highs. This creates a price wedge. Now, inside of this price wedge, you will notice there's going to be a channel that's forming at the top here, and this is actually very common among these larger range price wedges. What this is telling us, and you really don't even need to see the channel there. I'll go ahead and I'll draw in a channel for you, but in all reality, this channel just stands right out without even really needing to be drawn. What does this channel tell us? This channel tells us that we're going to have to be patient here to see these bounces off these lows. The biggest clue we get from this channel is that I want to be selling the highs of this channel coming down. It's a bear channel. We can sell the highs of the range. We can buy the lows of the channel. So right now, as you can see here, we will expect the high percentage trades to be to the short side today. This is very, very important. We understand that even though I'm going to give us some guidance for a short-term buy right now, we have to remember that with a bear channel, we dream of those trades, right? When I close my eyes at night, some people count sheep, right? I count selling the highs of bear channels, buying the lows of bull channels, right? This is what dreams are made of. So we know where the high percentage trade is. The high percentage trade, right, is to sell those highs. Now that we know where that is, it's up to us now to be a little bit patient, because if we don't stay patient out there trying to buy at these lows, unless we have something else, right? Cue the next card, Joe. We'll take a look at a 5-minute chart next, and you'll see why we have some of these opportunities for short-term buying opportunities. So long-term sells today, and I'm going to be looking for a chance to sell at the high of this channel. As we go lower, you're probably, from what we see right now, we're probably going to see a little bit of this yo-yo effect. New lower lows, we bounce. New lower lows, we bounce. New lower lows, we bounce. What I'm trying to make is on our way down, we are looking to sell retracements. We're not selling lower lows. We're not selling that one-tick low, right? That's what rookies do. And rookies, of course, are the ones that pad my trade account every day. Now, on the way down, some important levels that we want to be aware of on the way down. 92.48, that's going to be a major target coming off these highs. 92.48, 92.50 we talked about last night on the newsletter. If you're a member of our newsletter, we sent this out last night talking about 92.50. Well, it's actually 92.48. 92.48 will have to be it's a psychological level. It's a half big round number. It's also about half of the range from bottom to top. So we know in good old Japanese candlestick reading, that daily range, cut it right in half, and of course that's what we're going to be looking at, 92.50. So we have to use that as a target. 92.50 will be a target we need to use. I'm looking consistently here at 92.50, 92.41, and 92.19. These are my big levels in the short term on the way down. We've got 92.05, 91.78, and 91.54. I would love to buy this 91.78, 91.54 area later on this week. We call this the last call fibs. This is a Fibonacci calculation zone that also ties directly in, as you can see, with the lows of this wedge. We would love to see a chance to buy these lows. We'll have to wait and see how this day progresses. I hope we get it all the way down there, because if it gets all the way down there, we probably have grabbed a good chunk of it on the way down. So we know that this 15-minute anchor chart, this is a perfect slower time frame for an intraday trader, right? We looked at weeklies, we looked at dailies earlier on in the week. We don't need to worry about that too much this morning. I'm going to drill all the way down to a 15-minute, and I'm looking to sell short for the higher percentage trades, looking to buy long in the short term since we are at the lows of this channel, but staying patient to look for those selling opportunities and using that 92.50, 92.19, 91.78, and 91.54. Again, if we get down to the lows, I will be looking to buy those lows here today. Alrighty, that's the 15-minute chart. Enough of that. Let's look at the reality, what's happening right now in the 5-minute. The 5-minute chart gives us a lot of information here. Now, one of the reasons why we look at a 5-minute chart is because it's going to tell me exactly what to do right now. We can look at daily charts and we can speculate, and this might happen and that might happen, right? And we would fit right in on CNBC or Bloomberg, but we're traders. And since we have to pay our bills with our trade account, since we only eat what we kill, we need to be ready right now. My 5-minute chart tells me right now that we have a very small trading range coming out of London. This small trading range coming out of London, it's marked up in the gray box here. This small trading range coming out of London tells me that we have chance to push lower. Now, I've got 92.34 being London's high. I'm sorry, 93.34 being London's highs. So we do still have potential here for price to want to push lower. We definitely have it, but it's going to have to make it through this reversal zone first. This reversal zone tells me that I am bullish right now in the short term. In fact, we called that this morning here on our StockTwits account. You guys can check us out on StockTwits. We're always updating charts all day long on that blog feed as well for crude oil. So we're going to look to buy this reversal zone in the short term. Where's my target? 93 even. I wouldn't put my target at 93.04. I would put it at 93 even. If you want to leave a runner on the table, 93.21 is a conservative runner. You want to be a hero? 93.34 for your runner. I will take half of my trade off at 93. Okay, nice big round number. That's an easy one. I would then look to take the other half off, considering it's the first trade of the morning. 93, I would say, again, you don't want to be right at 21. I would say 17, say 15, okay, something like that. And again, like I said earlier, if we feel like those buyers are really in charge, if the dollar happens to be moving lower, if we get 8:30 news this morning that is bullish for crude oil, right? A lot of different scenarios. We'll leave our runner target up there at 93.30, right? 93.30. So we gave you guys plenty of levels overhead here to use as targets. I'm going to buy in that reversal zone. Nothing changes here with me, right? That's the mark of a long-term strategy. Nothing changes. I'm not changing things from day to day. I'm always looking to buy this reversal zone. I'm always looking to sell short with a close below that reversal zone, and then I'll use the levels below me. Looking at the levels below me here, we have a tremendous amount of room to the downside. Look at how much room we have to the downside before we run into yesterday's low. Look at that. Boy, there's yesterday's low all the way down here. Now, if you've been watching me for a while now, you probably know I love to use yesterday's highs and yesterday's lows. I use the previous high of day and the previous low of day, just like Peter Stettlemeier used to use the value area high and the value area low. I use market profile theory quite consistently in our live trade room, but you won't see me using it the way most traders use it. So we know we've got this huge range to get down to the low from yesterday. That means the bulls here are clearly keeping this thing propped up right now, right? Remember, when I'm inside the range from yesterday, previous low of day, previous high of day, what does that tell me? We call that an inside day. And an inside day, buy lows, sell highs, right? Expect to see range-bound trading. Okay, so I'm going to buy lows and sell highs. I'm going to buy that low of day. I'm going to sell that previous high of day. Above the previous high of day, I'm bullish. Below the previous low of day, I'm bearish, just like it would be the value area high, the value area low for all you market profile theorists. What we're looking at here is on the way down, I've got to get below this reversal zone of 92.66. I can get short thereafter, taking profit targets at 92.48, and I've got a pretty rock solid buy zone here at 92.30. So just kind of filling in the blanks from that 15-minute chart, 92.30, 91.94, and you can see here that's 91.37. 91.37. I'm going to put all this up on the blog here for you guys, so you've got it anyways. So those are my levels as we go to the low side. Again, I will be looking to buy as support. If support is broken, we then sell retracements with broken support because it turns into resistance. As we go higher here, you'll notice we've got a lot less distance to get up to that previous high of day. Look at the levels above us now. We saw that huge range below us. As we go above us, though, we've got a little bit of resistance waiting for us here. Again, I've got that target here at 93.04, 93.21. We've got levels in between 93.11 and 93.27. But remember, I'm going to be going up to that 93.04 first. If we get through it, we'll go up to that 93.21. We get through that, we're going up to the 93.34. Again, the top of this range is your major runner target on your buys. As we go higher here, remember, I will look for a reversal and then a short back down. As we close above 93.50, I would wait for 93.50. Get above it. I will be buying up to yesterday's high of day. Yesterday's high of day is definitely going to be a price magnet. And remember, I'm always looking for that price at the highs from yesterday or the lows from yesterday to go up, fail, and then whoop, we call that the inside-out setup. The inside-out setup is one of my favorite trade setups, and it uses the previous high of day and previous low of day. Keep an eye out. You've got Friday's high of day. You've got Monday's high of day. This is going to be an excellent place here to look for a fake-out breakout and a reversal to come right back down in. There is a chance, though, these buyers may just be with it here today, and if it keeps on cruising, we will be buying pullbacks. That's one of the keys to being successful, right? We don't just buy highs. Now, I did that when I was a new trader. You may be doing that right now early in your trading career. You might be asking me, but Joe, how do we know it's going to be a fake-out breakout? How do we know it's a fake-out breakout? Oftentimes, the only way we know it's a fake-out breakout is when I've already gotten into the trade and I'm getting stopped out. How do we know the difference between a successful breakout that we want to buy or a fake-out breakout that we want to avoid and sell? It all has to do with how far the price pulls back. I'm going to look for price to break above that 93.70. I have a sweet spot that I'm going to look for that pullback to get into. I am not going to buy that high. I'm going to make those buyers prove to me that they're in control by pushing new highs, pulling back, watching the speed, and watching the tape pick back up. We will know exactly when to enter, or based on speed analysis, we'll know when to avoid those breakouts at the highs. Look for those fake-out breakouts above yesterday's highs and Friday's highs. And again, we are bullish here in the short term, buying at these lows right now using profit targets above us. I'm going to post this chart for you all on the blog today. That way you'll have all the levels you guys need. If you got any questions, shoot me an email at jj@schooloftrade. That's it for me for now. I'm going to head on over now. We're going to go across the country from Los Angeles down to New York City. We'll head over to the NYMEX exchange, and we'll listen in to see if I'm on the right track here this morning. Marty, what are you seeing there on the pit this morning?
All right, good morning, JJ. Good morning, everybody. So we're looking across the board this morning, and I'm seeing very sideways type trading, very subdued, 92 to 94 range. That's all we've been watching here for. Again, if we break below 91.80, we're pretty much here sellers down in the pit. If we break above 94.10, we're buyers. Other than that, we got a trade within this range of 92 up to 94. And right now, as you can see, we're kind of sold out in the middle of the range. And we really kind of just want to continue to watch this type of range-bound trading. Like I mentioned, we're towards in the 50% middle of the range right now, as JJ was saying, and we could see us trade down to the low of the range. So I'm thinking sideways activity throughout the day. Well, I can see that we're probably going to make it down to the bottom of our range today because I'm looking across the board and I'm seeing our multiple market divergence pointing a little bit lower at the moment. Keep in mind we do have a couple pieces of news that are hitting the board today. I got 8:30 data hitting the board. What is it? Trade balance, and then I got economic optimism at 10 o'clock. So again, we have two pieces of data hitting the board today, and then API figures, they hit the board tonight. Those are crude oil API figures. Again, those are the inventory numbers that we like to look at the night before we get our big DOE number, try to get an indication on what's happening. So as I proceed on here, that's our news for today. So far here, markets are trading a bit lower so far this morning. I'm looking at your crude trading around the 92.80 level and 92.85 last prints. Again, we're looking at just a little bit of downside activity possibly. Again, all we got to do is make it down $1, and then we're around that big line in the sand. So as I mentioned, the line in the sand to the downside will be 91.80. Line to the upside in the sand will be 91.40, 94.10. So again, we got 91.80, 94.10. Other than that, we're trading within a range of 92 to 94. Pretty simple, right? So let's this morning just take a quick look at all our indications. I'm looking here now at your dollar. Dollar starting to trade just a bit higher. Again, had a huge day to the downside yesterday. Now the dollar just rebounding just a bit here. So the dollar trades a little bit higher, crude trades lower. We have a risk-on sentiment. I'm looking at your euro and your other currencies here supporting crude trade just a bit lower at the moment. Again, your crude, your RBOB, your heating oil. Right now, Brent, they're all trading sideways but slightly lower. Again, we're looking at now your crude, again, sideways to slightly lower. I got RBOB trading 279.17, heating oil trading 283.34, and Brent holding levels below 102, even at 101.90. So again, we are watching here our markets supporting just a bit of some downside here, but slightly sideways. As I mentioned, I think we chopped with between 92 and that 94 range, 92, 94 range. So I don't think we change anything. I think we just trade within this range, and it's a pretty simple range to watch. Alrighty, guys, so this morning here, I just want to look at open interest real quick for you guys. Let's see if we decrease or increase from open interest. 281,714 is where open interest currently stands here. On yesterday's chart, open interest was just a bit around the same level. So again, we have open interest currently stands 281,714. That supports our range at the moment. Again, no build in open interest. Open interest in the products are looking rather slim as well. Again, a little bit of a build in the RBOB, the heating oil, but RBOB is in good shape as well. All right, let's look at the spreads, ladies and gentlemen, this morning. That's a good indication here. Just as we look at the dollar, we also look at the spreads here down on the trading floor. And right now, I'm looking at bearish type of trend for the spreads. Brent WTI spread right now, ladies and gentlemen, is showing us right now 905. Again, I got 905 in the spread, so that is bearish. The calendar spreads, let's look July to Augie, July to SEP, July to OCC. They're all in backwardation today. I got 20 cents on July Augie, 27 cents on July to SEP, and about 20 cents also on the July to OCC. So again, all these spreads are pointing lower. Again, it is giving us a little bit, we're all in backwardation. It's pointing lower for the crude. One more other thing we're going to take a look at, ladies and gentlemen, that's your cracks and swap spreads. Crack spreads are trading 87.2632. 87 handle equivalates for crude to trade here in this 92 handle. So again, promising to the downside for spreads this morning. We're also going to be keeping an eye on our multiple market divergence and all of our news. All right, guys, let's talk some levels here now this morning. Again, let's talk about some levels here. As yesterday, we pretty much, these levels stuck in the market very well. Thank you. So here are my levels again, guys, for today. These are the levels that I just pulled off the board, guys, on the trading floor. So let's first talk about yesterday's pit session. Crude pit session high 93.70, your low 92.23, which we are above still. Again, that 92.23 you want to use as a level of support. That's your pit session low. We end up closing and settling the day at 93.41. Yesterday we had a net change of about $1.08 in a range of about $1.47. So again, a rather tight range yesterday. Even though we did have all upside activity, it was still a rather tight range. Implied volatility 24%. The OVX trades at 24.78. So volatility is rising just a bit. And this morning we still see volatility holding steady and firm around 23%. Again, still holding, it's still firm for the most part, bouncing between 23 and 24. Daily pivot today, 93.11, which we are trading below at the moment. So we're below daily pivot. 93.11 is your daily pivot, and we're talking about that 92.23 being that support for the low. Alrighty, guys, let's talk about support resistance above and below this morning here, and then we'll talk about some activity in the pit from yesterday. Alrighty, guys, so resistance above here, I got 93.99, 94.58, and 96.05. Some support down below, 92.52, 92.23, 91.64, and 90.17. Those are your levels of support below. So, guys, in the pit yesterday, we saw locals pretty much, they're flat into yesterday. They were flat into yesterday's close. Dealers were pretty much straddling the price. They were playing the range of 92 to 94. So what we were seeing was the locals. They showed about 4,000 times they buy the 92.5 to 93 call, and they show still interest in the 91.5 to 90 call, but less than 2,000 lots. So again, you can see there's a little bit more activity on the calls to the 93 to 92 in the options pit. In the outright pit, dealers were pretty much buying all morning yesterday and into the afternoon. Locals were the guys who were buying all morning, but then they balanced in the afternoon. So locals are flat. Paper's still relatively long. We saw about 2 million in physical delivery buying yesterday, so that was interesting to see come into the market. Now, I believe we're almost up to about 16 million in physical delivery, so I think that we'll be done with that physical delivery buying and will not be huge a variable in the market anymore. So, guys, keep that in mind. You want to be able to kind of let that, roll into your mind and let you know that there's going to be not a lot of physical delivery buying in the market as we're almost done with that physical delivery. So that was what happened in the pit yesterday. Guys, let's talk about natural gas, ladies and gentlemen, here this morning. I'm looking at natural gas pit session high from yesterday, 404 even. Your low, 397.10. We end up closing and selling the day at 398.5. Your net change on the day for natural gas was down 3 pennies only, so it wasn't a huge day. It was about a 7-penny trading range, though. Volatility, 31.5%. The vol index, 31.5%. Today, your daily pivot's going to be at 4 even, guys. It's 4 even on your daily pivot today. Alrighty, guys, so resistance above 402.90, 407 even, and 414 even. Some support on your natural gas down below. Ladies and gentlemen, I got 396 even, 393 even, and 386 even. So we're looking at big round numbers here. We're looking at those even prints, 396 even, 393 even, 398 even. I'm going to be looking for a break of 395. Once we get below 395, I'll be looking at 390, and then it's going to be a good opportunity to buy at 390s. As we're stuck in somewhat of a bearish-like channel to the downside, which I'll give to JJ so he can post on the blog. I'll put that bearish channel on the blog for you guys just to see on natural gas that we're trading in a downwards trend. And ever since we had that build in inventories and the build in the Baker Hughes rig numbers, we've been seeing lower prices. So that's something to keep an eye on and to be concerned about. Again, 395 can act as some good support. If we break below that, we're down to 390. And that's really about it. Again, as I mentioned here, watch those locals, true day traders out there. They're just really scalping the markets just to get their positions for the day. They balance out by 2:30 and they're done. The paper, like I mentioned, they were showing us a lot of buy-side activity, guys, that paper. And they've been long-sided today. playing the range, of course, buying the 92, selling the 94. And as I mentioned, if we do break below that 180 level, they'll be selling. If we break above 94.10, they'll be buying. And that's really about it. That's all I got for down here, guys. Everybody have a wonderful day. I'll see you all in just about an hour. I got to get my hustle on, and I'll see you guys later.
Boy, as always, Marty, thank you so much for all the insight today. Thank you for the very important information there directly from the pit. I'm going to be putting up all of these charts here and the notes from today on our Crude Oil Squawk blog. Don't forget, you can always head over to sidewaysmarkets.com. You can find a link right there to the Crude Oil Squawk blog. It's always posted there Monday through Friday just after we finish up. So when you head over to the blog, you'll see a link right at the top there called the Crude Oil Squawk and Prep. And again, the address on that is sidewaysmarkets.com. Once again, my name is Joseph. Thank you so much for coming out and joining us today. I'm from School of Trade. I'm JJ at School of Trade. That was Marty at Traders Audio. It looks like our first target has been achieved on the crude oil long call from this morning. And we're going to hold on to that runner. 93.21 is up next. Hope you guys are out there having some fun this morning. Hope you're learning a little bit and earning a little bit. You got to learn it first so you can earn it. You too, Steve. Have a great day. I'm JJ at School of Trade. That was Marty at Traders Audio. We'll see you guys back here in 23 hours and 30 minutes for another crude oil morning prep. Have a great day out there, everybody. We'll see you next time. Adios, amigos. Bye-bye for now.